JD Frost, and welcome to the Accountability Show. This is episode 31. Episode 31, and we're talking about the how of tax planning. So we've talked about what is tax planning, why do we do tax planning, now how in the world do we do it? So we perform tax planning a few different ways, but the essence of tax planning is basically taking your information that you know right now in the current year and putting that into a formulated worksheet. So we have a template actually. If you go to www.starttaxplanning.com, you can watch a free webinar there that takes you through this template and exactly how we do it in a more detailed way. Today, I want to just talk about an overview of how we do tax planning. There is a specific system, and we need some specific pieces of information in order to be able to help you create a tax plan this year, or for you to be able to do it on your own. What you first need is you need to know how much you have paid in taxes this year so far. So if you're a W-2 employee, you need a recent pay stub. If you're the owner of an LLC or a sole proprietor, owner of an S Corp, you need to know how much you have paid in estimated tax payments for federal purposes and for state purposes too. But you need to know how much in tax you have paid so far. You also need to know what you've made this year. How much money have you made? On your pay stub, what is your current earnings? How much have you earned year to date? And then you need to extrapolate that information into how much it will be at the end of the year. So in tax planning, we are predicting how much money you're going to make and how much taxes you have paid already. If you own a business, sole proprietorship, LLC, S Corp, you need your recent financial statements. You need the balance sheet and the income statement, which is what we talked about way back in episode 12. I don't even know when. It was a long time ago. Go find that episode. But you've got to have your income statement and your balance sheet. Your income statement and balance sheet is extremely important because if they're not correct, then you're not going to know how much money you made during the year. That amount of money is what's going to be on your tax plan, and this is how we come up with your tax projection. See, there's three reasons why we do tax planning. The first reason is we want to avoid penalties and interest that are unnecessary. So we do that by making sure that you're within the safe harbor calculation. What is the safe harbor calculation? To calculate the safe harbor calculation, you have to take 110% of your prior year tax and 90% of your current year tax, whichever is the most, and make sure that that is paid in by December 31st by the end of the year. Well, actually, technically, it's January 15th. So you've got an extra 15 days after the end of the year to pay that in. That'll help you meet what's called the safe harbor calculation. See, the IRS wants you to pay in taxes throughout the whole year. That's why if you're a W-2, every time you get paid, you have to pay federal withholding. If you are the owner of an LLC, every quarter you have to pay federal estimated income taxes. It's just a part of the rules. So in order to avoid those penalties and interest, you've got to make sure that you've paid in enough. And that is 110% of your prior year tax or 90% of your current year tax. That's the first reason why we do tax planning. Second reason is we want to project what your tax bill is going to be. I don't know about you, but I don't like surprises. I hate surprises. I don't even like surprise parties, so never throw me one. I just want to know what's going to happen. I want it to be predictable, and I don't want to have a $60,000 tax bill when I don't realize it. I'm sure you don't either. That's the second reason we do tax planning. The third reason is we want to apply every single strategy we possibly can to our current situation in that current year in order to save as much money on taxes as possible. So those are the three reasons why we do this. How do you do it? We have to have those pay stubs. We have to have the information of how much you have paid in taxes so far this year, and we got to know what you're going to make, because we are able to take this template that is on www.starttaxplanning.com. You can go download that template right now, and we can plug into that template exactly the amount of money that you're going to make and what taxes you have paid, and we'll be able to predict within 3 or 4% what your tax bill will be. And then we can start manipulating those numbers based off if you purchase a car at the end of the year, based off if you decide to invest in equipment before the end of the year, or if you just decide not to collect any money the rest of the year, what your taxable income will be. Tax planning typically only takes about 1 to 2 hours. When we have people sign up and work one-on-one with us, we have 2 consultation calls. We provide a documented tax plan. We also provide you with an accounting assessment of what you need to be doing moving forward. Do you need to add bookkeeping practice? Do you need to add bookkeeping services? Do you need to add tax services? What is the accounting formula for your business? That's what we give you in our tax planning package. And when we're doing this, we're interviewing you on this first consultation call, and we're asking you questions about your life. Did you get divorced? Did you have a kid? Did you buy a house? Did you sell a duplex? Did you buy a building this year? All of the answers to these questions will allow us to be able to create a tax plan that's going to be custom to you and for you in order to avoid penalties and interest, and also to be able to help you save money on taxes. Because after all, taxes are your biggest expense every single year for every single taxpayer. It's the biggest expense that they have each year. And we want to minimize that as much as possible. The only way that we can do that is if we have this information. On the second consultation call, when we work one-on-one with you, we are going to go over a documented tax plan with you. We're going to show you exactly where your tax is now without any changes with the information that you gave us, and then where your tax plan could be based off of the changes that we might make, the recommendations that we would give you. If you decided to act on those recommendations before the end of the year, you might go from owing $25,000 in taxes down to $12,000 in taxes. I think in the example on the webinar, if you go check it out, www.starttaxplanning.com, in that particular plan, I think that we made one move at the very end that basically eliminated the entire tax.
I think it was buying a truck.
Yeah, buying a truck, right, exactly. I was talking to a client this week about buying a truck. By the way, if you want to buy a truck that's over 6,000 pounds, you can write off the whole truck this year. That's a big tax deduction. That's good to know before the end of the year, because that could allow you the opportunity to not have to pay for the truck right now because you finance it. And then also it's going to save you the $60,000 in taxes. So how do you do tax planning? The basic steps are get your information on what tax you've paid so far this year from your pay stub or your federal estimates. Get the information from your pay stub of how much your earnings are. And also, if you own a business, from your income statement and balance sheet. Plug that into our template that we have at www.starttaxplanning.com, and then you can come up with what your tax bill will be. You'll be able to avoid penalties and interest. You'll project exactly what your tax is. And then if you make any adjustments or apply any strategies that we would recommend, and you can see those by following me on Instagram, jdfrost.today, or watching one of our webinars, you can apply those strategies and save money on taxes. This is the how you do tax planning. It's pretty simple. It's pretty straightforward, but you have to practice this every day to know how one rule might affect you. One life change might be $100,000 difference in your taxes. Thanks for tuning in to the Accountability Show. I really appreciate you following this. Turn on your notifications, like this, comment below if you have any questions or anything. And please, please, please tell all your friends to subscribe, because I know you already did. I really appreciate you tuning in. And we'll be back on another episode, number 32, next time.